tax deadline is getting closer. Here's more help in your tax preparation by Manjit Singh CPA and Kusum Ramachandran.
Good morning, viewers. This is Manjit Singh, and we just had an argument. How many days are left for doing the tax returns? I said 2 weeks, and I was corrected by saying 10 days. 1 weekend. For me, it's still plenty of time, day and night. Anyway, we are having a lot of questions, and Kusum is going to help me answer those questions today. What income are actually taxable and what income is not taxable? The IRS has given out about 8 items. So, Kusum?
Well, it's all about gifts, I thought.
Yeah. What kind of gifts is taxable?
Every gift is supposed to be a taxable gift in the sense that it's not taxable to the recipient, but it is, because gifts are made with after-tax money. However, there are exclusions. If you give someone less than $13,000 during the year, you don't have to file a gift tax return. And by taxable, what I mean is that whether or not you have to file a gift tax return. If you pay tuition for your child or your grandchild or your brother or your sister or a man on the street, if you pay directly to a university to cover education expenses, that doesn't constitute a taxable gift even if it exceeds $13,000. If you give $100,000 to a charity, you don't have to file a gift tax return. If you give to political organizations, you don't have to file a gift tax return. Other than that, if the recipient is not your spouse, and the amount exceeds $13,000, which is the annual exclusion amount, you do have to file a gift tax return.
Next question.
Okay.
All right. I have a client. Mm-hmm. You know him very well, of course. He's been our client for the last 13 years.
Okay.
Gifted or transferred a real estate to his son.
It's a taxable transaction. You do have to file a 709 for that, because I would imagine that the fair market value of that property would be greater than $13,000. And if it was jointly owned by the two spouses and they gave it, that's still above the gift splitting $26,000 limit. So you would have to file a 709. Filing that does not necessarily mean that you pay taxes, but you eat into your unified credit is what it is, and it's required. And this has been an area that's long been neglected by enforcement, but certainly they're waking up to it. I am told that in the state of California, for example, the service subpoenaed the land tax records for transfers so that they would know where a taxable gift tax return kind of transaction had occurred and where such a return had not been filed. Of course, it's a separate matter that the state refused to give it to them, so then they have to go through the land records themselves. They just thought of making their job a little easier.
And what if I made a gift of $200,000 or $300,000 as a down payment? I think down payment was wrong. Put it in a CD so that my son has the
POD?
rights to it.
POD?
No, not POD. Rights to it. But because of that, the franchise individual gave us the franchise.
I would think that that's still a taxable gift.
Thank you. I agree with you. Now, ladies and gentlemen, this was a little exchange, and yes, Kusum is right that in California the records have been subpoenaed or checked out for the transfer of properties where there is no sale recorded amongst the family members. It does not necessarily mean that there is a tax consequence. Remember, today, under the current tax law, if you have transferred real estate, if you have transferred money or given money to your children to buy a business or to put it as a security deposit under his name for the benefit of somebody else, these are all transfer of funds. They are all subject to gift tax. Are you liable for the gift tax or not? It all remains on how much you have in that estate tax exclusion. Is that the right word, Kusum?
That is the right word.
And currently that limit is $5 million.
Right.
If that Bush era tax law had expired past December 31st, 2011, the estate tax limit would have come down. So those people, wealthy people, affluent people in our community wants to take advantage of that, you still have some time to play it, transfer it, and claim it as deduction against that estate tax limit. Anything else to add?
I do, yes. We have something to add in that people always want to take a deduction for gifts that they make. No, you can't. You can't gift your child or your grandchild money and take that off of your taxable income. You just cannot. You can make a gift to a charity and take a deduction. Charity to family doesn't count.
Right.
With that, I think we should wrap up and move on.
One slight sentence addition to the gift to the charity.
Sure.
You're welcome to give as much as you want to the charity, but remember, each year only 50% of your AGI is subject to the deduction. The rest
correct.
carries forward.
Yeah.
Having said that, ladies and gentlemen, I'm sure this is going to raise a lot of doubts, questions in your mind, and please direct it to our best friend Chandran. In the meantime, next week we're going to talk about extensions and something special the IRS came out this year. Until then, this is Manjit.
And I'm Kusum. Goodbye.